Do you like the idea of creating a dependable source of growing passive income? What if I told you that I take pride in providing you with a weekly list of dividend stocks that can do just that?
This is like a modern day Enchanted. It's like a fairy tale.
Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, and congratulations on finding the only weekly stock list that you're ever going to need as a dividend investor.
Jackpot!
In this series, I outline the 5 most important dividend stocks that you need to know about going into each and every week and share with you important information so you can see if any of these stocks are right for you. Now, while all the information in today's video will be provided to you at the low cost of free, if you're wondering how you could ever repay me, it's quite simple. Leave a like on this video as it helps others find this series and the channel, and then comment down below as soon as the video is over and let me know what you thought of this week's list. Were there any stocks that you already own? Were any completely new to you and you heard about them for the first time? And most importantly, did any stocks I mentioned in today's video deserve a deeper dive from you? Let me know that down below, but now let's go ahead and dive into the first stock on this week's list. Coming in at number 5 is American Financial Group, stock ticker AFG. AFG is a quarterly payer in the financial sector, paying $2.84 per share per year with a forward dividend yield of 2.37%. AFG's been paying and growing their dividend over the last 19 years. They have a 3-year dividend growth rate of 12.28%, a 5-year dividend growth rate of 12.24%, and a payout ratio of just 23.85%. At the time of recording, American Financial Group was trading 13.12% off of their 52-week high. They have an ex-dividend date of July 15th with a payout date of July 25th. And looking at this chart, you're going to be able to see the returns of $10,000 both with and without dividends reinvested. Up at the top, AFG would have turned into $40,120.43. That's compared to the S&P turning into $33,568.30. That's a difference of $6,552.13. Down here at the bottom, without reinvesting your dividends, AFG would have still turned into $33,360.64, whereas the S&P turned into $30,819.31. That's a difference of $2,541.33, and the difference between reinvesting and not reinvesting those dividends into AFG was $6,759.79. Coming in fourth place is Watsco, stock ticker WSO. WSO is a quarterly payer in the industrial sector, paying $10.80 per share per year with a forward dividend yield of 2.24%. Watsco has been paying and growing this dividend over the last 11 years. They have a 3-year dividend growth rate of 11.38%, a 5-year dividend growth rate of 10.51%, and a payout ratio a little higher than I like at 68.66%. At the time of recording, Watsco was trading 2.49% off of their 52-week high. They have an ex-dividend date of July 16th with a payout date of July 31st. And again, we have the same chart up at the top. Watsco would have turned into $64,955.39, outperforming the S&P 500 by $31,387.09. Down here at the bottom, without reinvesting those dividends, Watsco would have still turned into $53,936.54, outperforming the S&P by $23,117.23, and the difference between reinvesting and not reinvesting those dividends was $11,018.85. Next up, coming in at number 3 is Owens Corning, stock ticker OC. OC is a quarterly payer in the industrial sector, paying $2.40 per share per year with a forward dividend yield of 1.45%. Owens Corning's been paying and growing this dividend over the last 11 years. They have a 3-year dividend growth rate of 30.85%, a 5-year dividend growth rate of 21.11%, and a payout ratio of just 14.9%. At the time of recording, Owens Corning was almost trading 10% off of their 52-week high. They have an ex-dividend date of July 15th with a payout date of August 2nd. And looking here, we have that $10,000 while reinvesting your dividends. That would have brought back $49,886.36 in Owens Corning, which outperforms the S&P 500 by $16,318.06. And down here at the bottom, $10K without reinvesting the dividends, Owens Corning would have turned into $45,599.91, outperforming the S&P by $14,780.60, and the difference between reinvesting and not reinvesting those dividends was $4,286.45. And now that we're halfway through the video, you know if you like it or not. If you do, leave a like on the video as it helps me continue to grow my channel. Use that comment section down below to chat it up with me as I love talking to all my subscribers. But now, let's get to number 2. Coming in at number 2 on this week's list is Williams Sonoma, stock ticker WSM. WSM is a quarterly payer in the consumer discretionary sector, paying $2.28 per share per year with a forward dividend yield of just 0.81%. Williams-Sonoma has been paying and growing this dividend over the last 18 years. They have a 3-year dividend growth rate of 21.61%, a 5-year dividend growth rate of 16.7%, and a payout ratio of 13.78%. At the time of recording, Williams-Sonoma was trading almost 20% off of their 52-week high. They have an ex-dividend date of July 19th with a payout date of August 23rd. And looking here, we have that $10,000 investment while reinvesting the dividends, where Williams-Sonoma would have turned into $49,001.14, outperforming the S&P by $15,432.84. Down here at the bottom, without reinvesting those dividends, Williams-Sonoma would have turned into $41,288.04, outperforming the S&P by $10,468.73, and the difference between reinvesting and not reinvesting those dividends was $7,713.10. And here it is, the stock you must know about going into next week. Coming in at number 1 is Zoetis, stock ticker ZTS. ZTS is a quarterly payer in the healthcare sector, paying $1.73 per share per year with a forward dividend yield of just 0.99%. Now, Zoetis has been paying and growing their dividend over the last 12 years. They have a 3-year dividend growth rate of 21.5%, a 5-year dividend growth rate of 22.72%, and a payout ratio of just 27.05%. Now, at the time of recording, Zoetis was trading 13.35% off of their 52-week high. They have an ex-dividend date of July 18th with a payout date of September 4th, and that $10,000 investment while reinvesting the dividends would have turned into $57,648.01, outperforming the S&P by $24,079.71. Down at the bottom, without reinvesting your dividends, ZTS would have brought back $56,070.58, outperforming by even more at $25,251.27. And the difference between reinvesting and not reinvesting those dividends into ZTS was $1,577.43. But with that, I was just able to share with you 5 dividend stocks that I felt you needed to know about coming into this week, and I really hope you guys enjoyed it.
Yeah, we did.
Don't forget to talk to me down below in the comments, as I personally read and respond to every single one of them. And if you guys happen to miss last week's video with another list of 5 great dividend stocks that you need to know about, check that out right here. But until next time, see ya.